Welcome back, Focus learners. In this explainer, we're setting our sights on the skies to examine an absolute powerhouse of the aviation industry. We are breaking down AerCap's massive second quarter 2026 earnings report, setting the stage for a top-down look at their powerful engine of growth. We're going to see exactly how this aviation titan is generating billions in cash, rewarding its shareholders, and navigating a pretty fascinating global supply constraint.
Okay, let's dive into this. Here is our flight plan for today. We'll kick things off with cruising altitude for our Q2 highlights, then move right into revenue and asset sales. From there, we'll look at rewarding the shareholders, expanding the aviation fleet, and finally, their raised guidance for 2026. Now, to really appreciate these numbers, we first need to ground ourselves in what AerCap actually is. They are kind of the invisible giant of the skies. When you board a commercial flight, there's a very high chance the airline you're flying with doesn't actually own that specific plane. AerCap does. As the undisputed global leader in aviation leasing, they manage an astounding portfolio of over 3,500 assets for hundreds of customers worldwide. Basically, they buy the planes, lease them to airlines, and eventually sell them. It's a highly capital-intensive business, and right now, well, business is absolutely booming. So, let's start with Section 1, Cruising Altitude, our Q2 highlights. Just take a look at this. AerCap generated a massive $726 million in net income for the second quarter of 2026 alone. And if we look at their adjusted net income, which accounts for things like the amortization of maintenance rights, that number actually climbs to a staggering $811 million. To put that into perspective, that represents an adjusted return on equity of 18%. Right out of the gate, we're seeing the sheer scale of their financial momentum. It's a highly lucrative, smoothly operating machine. The core philosophy behind these numbers is perfectly captured in this quote from AerCap's CEO Angus Kelly. The macroeconomic tailwinds driving these results are straightforward, but they are incredibly powerful. The global demand for air travel remains super robust, right? But the physical supply of new aircraft is severely constrained. Manufacturers literally cannot build planes fast enough. So, what does this all mean? It makes AerCap's massive existing fleet incredibly valuable, giving them some incredible pricing power and strategic leverage. Which brings us nicely to Section 2, Revenue and Asset Sales. Let's get under the hood here. This table beautifully illustrates exactly how they're generating such massive revenues. Look at the basic lease rents. That's the steady, predictable heartbeat of their business. It grew slightly by 1% to almost $1.7 billion. That's fantastic stability. But the real strategic contrast is right there in the second row, net gain on the sale of assets. Because planes are in such high demand right now, AerCap is selling off older assets for a massive premium. This line item surged an unbelievable 291% year over year, up to $223 million for the quarter. This active portfolio management fueled a 15% jump in total revenues, bringing them to nearly $2.2 billion. Now, to get that $223 million in pure profit from sales, they executed on $1.4 billion worth of total asset sales in Q2 alone. That represents 38 owned assets sold in just one quarter. And what's most impressive here is the efficiency of it all. They achieved an unlevered gain on sale margin of 20%. Essentially, they are selling these assets at 1.7 times their book value on an equity basis. They aren't just selling to raise cash, they're selling because the market is absolutely willing to pay a massive premium today. And that brings us to this back-to-back gut punch statistic. By combining those steady lease rents with highly profitable asset sales, AerCap generated an incredible $1.5 billion in cash flow from operating activities just in this second quarter. It is a phenomenal amount of liquidity pouring into the business in a really short amount of time. Let's move on to Section 3, Rewarding the Shareholders. This is the multi-billion-dollar question for any focused learner analyzing a business, right? What exactly are they doing with $1.5 billion in operating cash flow? Let's follow the exhaust and thrust pipeline of this massive cash generation to see where it's going. So, the crucial point is this. AerCap is aggressively returning this capital directly to shareholders, all while maintaining a rock-solid balance sheet. In Q2, they deployed $691 million to repurchase 4.9 million of their own shares. That brings their year-to-date buybacks to over $1.4 billion. They also declared a 40-cent quarterly cash dividend. And honestly,
Even with all this cash going out the door to shareholders, they maintained a very healthy adjusted debt-to-equity ratio of 2.05 to 1. The result of this disciplined strategy? Their book value per share surged 16% year over year, hitting $119.21. They are shrinking the pie of outstanding shares, making each remaining slice much, much more valuable.
Moving into Section 4, expanding the aviation fleet.
While they are definitely selling older assets at a premium, they are also combating the global aircraft shortage by reinvesting heavily into the physical reality of the business. In Q2, their capital expenditures reached $1.9 billion. This capital was used to aggressively acquire 25 aircraft, 5 engines, and 3 helicopters. They are systematically upgrading their fleet to make sure they have exactly what their 300 airline customers desperately need.
This next move brilliantly illustrates their long-term, future-proofing strategy. In July 2026, just after the quarter closed, they locked in an order for 15 highly coveted, wide-body Boeing 787 aircraft. But get this, because of the global manufacturing backlog, these plans won't even be delivered until between 2030 and 2033. AerCap is leveraging its massive scale, remember, a total portfolio of 3,567 assets, to secure their place in line for the next decade, guaranteeing they remain the dominant supplier of wide-body planes for years to come.
Finally, let's hit our last section, raised guidance for 2026.
Now, what's really interesting about this slide is the confidence it projects. Thanks to their strong global platform and consistent execution, management raised their full-year 2026 adjusted earnings per share guidance to approximately $16.80. But here's the kicker. That $16.80 figure explicitly does not include any potential gains on the sale of assets for the remainder of the year. Given that they just made $223 million on sales in Q2 alone, this guidance might just be a very conservative baseline.
Believe you with this final provocative thought. AerCap has positioned itself perfectly at the intersection of high global travel demand and severe manufacturing constraints. They have the physical assets everyone wants, and they're executing a highly disciplined capital allocation strategy to maximize that leverage. The macro trends show absolutely no signs of reversing soon. So how high can they fly in the years ahead? It's definitely going to be fascinating to watch. Thank you so much for diving into this data with me today on This Explainer, and keep learning.